All right. Well, let's turn to our next segment, and this segment we call economic indicators to watch. In other words, what the heck are you going to be watching out there? And Tony, I'll put it on you again first. And I usually get the easy spot. I get to go on last after you've embarrassed yourself.
You know, as always, one of the places that I'm going to look is what you're looking at, what's your headline, which is unemployment numbers.
Oh,
and I think that's a good, very good indicator. I think at this point, that may be the best indicator of whether we're starting to pull our nose up a little bit, or if we're continuing to dive. And like you, I'm a little bit afraid that we may be continuing to dive, but it's very important to see whether or not we're recovering that unemployment number.
I'm going to make you an official economist, you know. Of course, you can't take the pay cut. Can't take it. Marianne, what indicator are you going to be looking at?
Well,
you're obviously on the business side firmly, and you're looking at some of the early indications. I mean,
well, you know, as a business owner and as somebody that counsels businesses, I have been looking at the unemployment rate as an indicator, period. And that's not something I did 2-3 years ago. I wasn't really that interested in it. Today, I do think it's an absolute indicator of consumer confidence. I also think that the dollar, that's an indicator. But probably most important for me and for the clients that I deal with is the credit, the amount of credit that's in the market, being fed into the marketplace. I really feel like that's important.
For the
smaller
smaller business, you got to have credit. It doesn't matter that the interest rates are low. Well, our interest rates are low, but you can't have it.
Well, and I think that plays into your more agrarian focus or your agricultural focus. I mean, 80% of the world is powered by these small businesses, and if they don't have the credit to do business every day, we're going to have a serious problem.
Oh, yeah.
And I think they've probably, in my opinion, that's been where the lag has been when we talk about economic stimulus.
Yeah.
I'm glad we had the car stimulus. I'm glad we had the house stimulus, but I want some stimulus for small businesses.
Yeah, and on the banking side, as my renegade uncle once said, I don't have a credit problem. The people I owe money to have a credit problem. I mean, this is extending. We're seeing that credit problems, boom, 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 affecting across the board. Not good. Well, the indicator, gosh, I'm going to look at the PMI, Purchasing Management Index, comes out February the 1st, and Tony knows he's been paying for it. To us, for the College of Business, we do a Purchasing Management Index, first business day of every month. Been doing it now for 1994. Since, again, both of you were kids. So that's an early indicator. Look for a number. If the national number comes down, that's not going to be a good signal. It'll be bearish. If it goes up to 60, it's going to be bullish. It's right around 57 right now. So watch that number. Very important. Look at the inflation gauge in there as well. They publish an inflation gauge. We do at Creighton University through outlook-economic.com. We have our survey, which is a good indicator of the national, although ours is a bit weaker lately.
I think the confirming thing there is when you see those inventories decline and purchasing managers not buying to replenish those inventories, those items together really say that people are not confident about where the economy is going.
Right, and I'm going to be looking at the jobs report like you said. You're going to look at unemployment. I'm going to look at the employment, which is, again, February the 5th at 8:30 Eastern Time, 7:30 Central Time. Now let's turn to our final segment. Not that I'm anxious to get out of here. I'm enjoying the heck out of this. The Federal Reserve Open Market Committee. Now, only economists can love this, but they meet again the 26th and 27th. That's the Open Market Committee. Tony, what are they going to do, and what should they do? Or what should they do, and what are they going to do?
What they're going to do is hold pat because they don't have any other choice to do. I know that they would like to try and raise the interest rates in order to curb the inflationary impact that we kind of see on the horizon, but they're not going to have the ability to do that because they'll kill whatever recovery we have.
So, but maybe they should raise rates? Well, I don't get into that. I'm going to go on record as saying they should raise rates. I'm like you. They're not going to raise rates. Marianne, anything to say about the Fed? I mean, this is more on the economist side. And what are your businesses you see? They certainly don't want to see higher interest rates.
Yeah, I think what I said earlier. I think if the Fed can do anything or the government can do anything, it's to help kind of stimulate some of the credit back in the marketplace for businesses in general.
Sure, and so it's not just the interest rate which we're talking about. How about making it available? I mean, that's tantalizing for all these small businesses. I just say, well, interest rates are at record lows, and they're like,
Can't get anything.
Can't get it. What
Yeah.
good is it to me? That's worse than not having any.
Yeah.
If I can't get it, I'd rather it be at 10, 15%, not at 2 and 3%. You know, and Congress meddling in the Fed. I mean, Tony. I mean, that's.
You know,
I mean, got 15 seconds, Tony.
That's why we have the Federal Open Market Committee, so we don't have that.
Okay, so you're like me. Get Congress out of the Federal Reserve.
Don't politicize our economy.
Don't do that. I wholeheartedly agree, and certainly I hope our audience agrees. Well, today, Tony Hendrickson, Dean of the College of Business here at Creighton University, and Marianne O'Brien with OBI Creative have joined me with, I think, a good program, with a great program from their vantage point. I think I did okay, and we're gonna join us again. Please join us again in February when our next podcast comes out, and we'll deal with the economic issues of that time. Until that time arrives, please may your cup, economic cup runneth over.